Snipers, you have to see what's happening to the Bitcoin price this weekend, as this is a collaboration video with my best friend and one of the best analysts that I personally know, Joshua Earp. By the way, help him reach 100 subscribers from his brand new YouTube channel that he just launched. Link is in the description. But this is an emergency video. I want to talk about Bitcoin against the S&P 500 right now because we have a weekly close in less than 24 hours. And this chart, I know Bitcoin broke its 200-week moving average. I know Bitcoin broke its previous all-time high from 2018. And it's broken all of these rules, all of these charts that people thought were tried and true principles and foundations that wouldn't get broken. But this chart right here, it did not break the 200-week moving average. This chart right here, Bitcoin has never broke the 200-week moving average. It has never closed a full weekly candle body below the 200-week moving average. Bitcoin has, even with this recent capitulation, despite Celsius becoming insolvent, despite what happened to Luna and Terra, did not break below the 200-week moving average. The Bitcoin against S&P 500 chart, nobody's watching this chart, by the way, which is exactly the type of material and information that you need to be aware of, because if retail investors are all looking at Bitcoin and the 200-week moving average, they think it's over. They think, okay, Bitcoin broke the 200-week, it's done, right? And that's why I have my buddy Joshua Earp. I'm going to introduce him in just a second, but look at this chart right now, snipers. We have not broken below the 200-week moving average ever in the history of Bitcoin's chart here for Bitcoin against the SPY. Even during this capitulation, we closed the weekly candle body above the 200-week moving average. Why are we on live right now with each and every one of you on the channel? Because look how important this next weekly close is. Right now, as I record this video, Bitcoin is below the 200-week moving average. But remember, it's never ever in the history, despite any capitulation, closed a weekly candle below this 200-week moving average. So if we are correct, we might be wrong. We might not be genies here. I mean, if we are wrong, then Bitcoin shouldn't see any upside in the next 24 hours. But if we are correct, we're going to find that out in the next 24 hours, because that means that this weekly candle has to get back above the 200-week moving average, which also means that we have to see Bitcoin from current price go up at least another 3%. And that would allow Bitcoin to actually break the recent consolidation highs to get to 24,000 US dollars, because just a 2% move from where current price action is right now breaches this recent high. Now, of course, we're going to talk about the bearish opinion as well, because if we do not see this move to the upside and Bitcoin does actually close for the first time ever its weekly candle body below this 200-week moving average for Bitcoin against the SPY, that would be one of the most bearish things that I've personally ever seen happen to Bitcoin. And so, Josh, what do you think? I want to first introduce Joshua, by the way. I see that we have almost 100 viewers right now. We want to help Josh hit 100 subscribers. This is his first time on YouTube, one of my best friends, and one of the best analysts that I personally know. As a matter of fact, Josh, we'll have you on right now. I have your screen pulled up. You can talk a little bit about what Bitcoin has done so far and introduce yourself. By the way, he's an advisor to billionaires, to celebrities, lives in Hollywood, California, and has really built himself up a great reputation. You can also find him on Instagram. But yeah, Joshua, go ahead. I want to give up the stage to you, because you're one of the wisest men that I know. And so welcome, Josh, to the show.
Awesome, man. Can you guys see my screen? Or?
Yes, they can.
Okay, cool. So, so thank you so much for the introduction. You know, Naeem is also my best friend. Anyone that knows us, both, knows that for any period of time. And actually, it was due to Naeem that first got me inspired and taught me the basics of all this. And, technical analysis can get incredibly difficult, but you just have to keep things simple. It was Michelangelo that said, "I see the angel in the marble and I carve everything else away." And that's what you really have to do. I mean, one of the biggest things Naeem taught me is don't draw imaginary lines. I've gotten wrecked before drawing imaginary lines. That's something you don't want to do, right? So essentially what we're looking at here is the Bitcoin chart. This is on the weekly, so that means, every candle is weekly. And there's a few things I want to talk about kind of from a macro perspective here, and also from a simplicity perspective, right?
Josh, could you quickly show could you turn your camera around, show them how many screens you have so they know how legit of an analyst you are? I know he's got a white background, but this guy's hiding. Look what he's hiding. Look at his setup. He's hiding his crazy setup that's in front of me. It almost looks like he's in Wall Street right now. But anyways, remember, subscribe to his channel. But yeah, go ahead, Josh. Sorry.
I wanted to be on my laptop so that the internet wasn't lagging. But yeah, no. So there's a few things I want to talk about, right? And the first thing is these horizontal lines you guys are seeing. These are the horizontal lines that have the most weekly confluence, because when you're trading and you're making decisions, or just even if you're investing in a long-term DCA portfolio, which as Naeem also taught me, you want to keep your HODL portfolio and your day trading portfolio separately. But here's the thing, guys, regardless of what you're doing, the same technical analysis applies. These are the weekly horizontal lines, the blue lines that have, the most confluence. Now, one thing I want to point out, now the whole basis of this video and some things I want to talk about, and Naeem and I are going to build on this more, is why we think we're in store for a very big bull market soon. And we're going to be talking about a few things that nobody else that we've seen on YouTube is talking about. And ironically enough, they're some of the most simple yet obvious things, but nobody's talking about them. And they always say, when in doubt, zoom out. So essentially, when you zoom out on the weekly, there's these vertical, what you would call just trend lines, right? So these are just vertical lines. You'll see about 4 of them on the screen. There's 1, 2, 3, 4. What this is marking is the beginning of each bull and ending with each bear cycle. So a full cycle between each one of these lines. You'll see we have one here right before this bull run that got up to 20,000 historically. We have this one right here, and we have this one right here, which look at this bull run. This was huge, right? Then we had a retracement. We had another line right here. And so if you look and if you measure the amount of space between each line and each full bull and bear market cycle, what you'll find out is that literally where the price is currently, right about here, if I were to draw it, I would just come over here. I'm not going to draw it yet because we haven't printed it yet, but I believe we're very, very close to printing it. Just go vertical line right here. So this is where we're at. Kind of if you wanted to look at it, you would see that we would be about a perfect horizon or perfect amount of time before the next bull cycle. So that's one thing that I have my eye on.
You know what I love about that line, Josh? I love the fact that the only time that the yellow line was breached was during the March of 2020 capitulation, which was sort of abnormal. Yeah, we could even theorize that it would have never have been breached if March of 2020 didn't happen, which obviously was a big surprise to markets, and the Feds had to come in and rescue us. Now, we do have some questions from live viewers, but a lot of people are saying here, oh man, we've got a lot of people on live. If you guys have questions for Josh or I, feel free to ask in the chat, but I didn't mean to interrupt you, Josh. Go ahead, man.
It's all good. And I mean, that's what Naeem and I do. We build upon each other. In fact, a lot of times we don't even take trades unless we're in sync, because we both have, different information, but at the same time, it's like, very cutting edge information. And when you put us together, it's like you get the reaction, right? Like chemistry.
I highly recommend you guys have a trading buddy. Josh is my trading buddy. So, whenever I take a trade, I let Josh know, and then the Discord.
You're absolutely right. So we're due for another one of these white vertical lines, which would begin the next bull cycle. If you take the measured move, it's about like this length right here. Now, here's the other thing. You're absolutely right. This yellow line is something that I've never seen anyone else draw. You will not find this anywhere else on YouTube, guys. I mean, this is crazy. And the thing is, it's the most obvious line to me, because it's the line that has the most confluence. I mean, so first of all, what validates a line, as Naeem has shown me, in the past, is that the amount of touches that a line has, the more valid that line becomes. And so the way you examine that is on a high time frame. Like right now, we're on the weekly time frame. Each candle is a week of time. That's a long amount of time when you're looking at candlesticks, right? And so the whole thing is, when you count the amount of weekly touches, if you really go back and you count 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. We did breach it here, but we're going to talk about that in a second. Talk about an inverted head and shoulders, right? Which we're going to talk about too a little bit later in the video. But look, it just keeps going. 20 touches, 40 touches. I mean, it's
on the live chat, by the way, we have a question for you, Josh. Dominic says, does Josh think the bottom is in? And then we have another question after that, but...
Yeah, so what I would say is, we'll talk about that. The bottom may be in, but it's very possible to have a double bottom. It's very possible to have a triple bottom. And we'll get into that too. I'll cover more of that in a little bit. But basically, the whole point I'm trying to make, guys, is this: there is no weekly trend line. There is no weekly trend line that has as many touches as this one single line. And one thing that we know is that, when we reach the destination, we don't have a cup of coffee, right? What that means is we don't kind of stick around. It's immediate reversal. And so if you look and you examine, literally we hit the yellow line, obviously just nothing's perfect. So it's like right within the general vicinity, but we hit the yellow line.
They went close enough to it to where you can make the case that it did hit versus it didn't hit, just in case they need to go down a little bit further, right? It's a type of, they do that all the time, right? It's like, did it hit or did it not hit? But if it's coming close enough, at some point you can make the case that it hit or not hit. As a matter of fact, let me quickly, if you don't mind, Josh, I want to pull up my screen because we do have some new viewers that just tuned in. I just want to quickly mention what's very important right now that we're talking about. So let me make sure that this actually pulls up. So for those that just tuned in, what we're talking about, Josh said something very big just now, which is when you reach a destination, you immediately turn right back around. You do not have a cup of coffee at that destination, or else that's not the final destination, right? So that means when you reach a target, like if this was the bottom, you would reach the destination and you will not see Bitcoin come back down to that destination. And I'm going to tell you this right now, snipers. I was on the phone with Josh recently, today actually, because he's my trading buddy, right? We should all have a trading buddy, so him and I trade, sort of the same amount of capital. And so Josh and I over the last 5 years have been trading buddies. And one thing that we talked about today was the fact that, with Bitcoin hitting that yellow line that Josh is talking about, but also beyond that, Bitcoin against SPY reached its final destination potentially because of the fact that it chose and decided to close the weekly candle from the capitulation above the 200-week moving average. I know Bitcoin didn't do that, but Bitcoin against the S&P 500 did choose to do that, which means, and why is this important? Well, in the next 24 hours, we are going to get an answer to this thesis. So this isn't something that is going to take 2 days or 5 days or a week to get an answer to. This is something that we're going to get the answer to this in the next 24 hours, because if and only if Bitcoin against the SPY has bottomed out, then this weekly candle that closes in 22 hours, 16 minutes, and 18 seconds has to get back above this 200-week moving average to validate the thesis that this was the potential bottom for Bitcoin against the SPY. And we're going to find that out in the next 24 hours. And so if Bitcoin does not pump in the next 24 hours, then maybe this thesis is wrong. That would actually be one of the most bearish things that I've ever seen Bitcoin do, closing Bitcoin against SPY below the 200-week moving average. And we just have to ask ourselves a question. Do we believe that this is going to close below the 200-week moving average? If not, so when it comes to a bottom, I think if we see this chart in the next 24 to 48 hours get back above the 200-week moving average, then we certainly could make the case that in the immediate short term, we found a bottom, because to go back to what Josh said about reaching a final destination, you immediately turn right back around. If we look at Bitcoin against the US dollar, it was not that long of an amount of time that you saw Bitcoin below $18,000, was it? I mean, how many of you were able to see Bitcoin below $18,000? I mean, it was only there for, let's say 1 or 2 hourly candles before we moved up, right? And so is this justified to be a final destination, what Bitcoin has done? Could this be a bottom? 100%. It follows the rules of a potential bottom, which is it reached the destination. But as Bitcoin, or as Josh showed you on his chart, Josh, if you can show him the chart again, you have that yellow line, which, it looks like we hit it, but we could have potentially have not hit it. We could potentially come in double bottom, triple bottom, whatever it might be. The point is this the bottom? I think, I'll tell you, I was looking at my chart today. I was looking at Bitcoin against SPY on my phone actually today, and I was out. I wasn't home, and it gave me deja vu of March of 2020. I'm just being honest, snipers. I was looking at the Bitcoin against SPY chart. Now, if you look at Bitcoin against the US dollar. Everyone's looking at that chart. It broke its 200-week moving average. Everyone's already lost hope on that, but that's not what we're looking at. We're looking at Bitcoin against the S&P 500, which has never, ever, ever closed a weekly candle body below the 200-week moving average, which right now, as we speak, if Bitcoin does not pump at least 2%, it's gonna, for the first time ever, close a weekly candle below the 200-week moving average. And so we're gonna find out in the next 24 hours, but I'm telling you, snipers, I called Josh, I'm like, bro, I'm having deja vu from March of 2020, man. And then Josh is like, well, let me ask you a question, Naeem. If this was March of 2020 again, what would you do? And I was like, I would probably buy a shit ton of Bitcoin on spot position and maybe even take a nice margin trade and leverage position long for Bitcoin right now if this was March of 2020 again. And it just gave me deja vu looking at the Bitcoin against SPY chart. After the capitulation, we held the 200-week moving average, and then right now we have this new weekly candle just sitting below it, camping out. You know, it would really, in the next 24 hours, if it doesn't transform into a bullish candle, then that thesis is out the window. And that's the most bearish thing I've ever seen Bitcoin ever do. But let's see. I have hope based on how the equity markets closed, based on the 4-dimensional revolving parts that we talk about here. By the way, we just hit 100 viewers, Josh. Our viewers are like this right now. So make sure you keep them interested after I ramble. But yeah, check this out. So based on the revolving parts that you snipers know, for those that don't know, for those that have been tuned into the channel, it right now looks like Bitcoin, because the equity markets are closed on the weekend, it looks like Bitcoin is certainly justified right now. I know, we haven't yet made the move, but we still have some time for this to happen. But based on the June 15th candle high, just notice this consolidation high. Bitcoin had this June 15th consolidation high. Once again, if we look, sorry, this is a new setup, so I'm sort of trying to get it here, but just notice how Bitcoin has yet to breach that June 15th candle high. But if we go to the S&P 500, this June 15th candle high, we broke way past it already. We filled this gap, and this shows confluence for Bitcoin to also do the same exact thing and breach beyond this June 15th candle high to get to this pocket here of 24,000. So based on the 4-dimensional revolving parts for this weekend, I think there's a high probability that we could see that move, because it's almost, as the video title was yesterday, snipers, guaranteed almost in a way. Because here's the thing, snipers, we monitor the 4-dimensional revolving parts every single day on this channel. And for those that do watch all of our videos, it's not every single day that the S&P 500 makes a move into the Friday close and Bitcoin doesn't follow that move. Usually it's the perfect, at least in the immediate short term. I know there are times that Bitcoin will dump, and against the S&P 500, it's not exact, but when we're looking at the immediate short term, right? Because there's also day traders that are monitoring this. In the immediate short term, usually when it comes to the day trading schematics, we'll see Bitcoin follow the S&P 500. It's not every day that we come into a weekend, Bitcoin is just kind of having a cup of coffee before, and it's not dumping or anything. It's just kind of like it's almost ready to make the move, right? It's not every weekend that happens. So we'll take some more questions from the live audience, actually. So, Josh, somebody asked, and by the way, your screen is up now, Josh, if you want to go in. Sorry for rambling, but Shard says Bitcoin has...
Unless you want to cover some questions first.
So Raiden says, could you talk about Bitcoin and the NASDAQ correlation? Bitcoin trading like a risk asset while gold just chills on a beach.
Yeah,
well, I know Josh has a lot of gold, so maybe if you want to talk some Josh has a massive portfolio.
Gold is to have, guys, and that's a big part about what we'd like to talk about as well, is the diversification of your overall portfolio from hard assets to digital assets, right? So you want to make sure you have at least 10, maybe 20%, of whatever you own in physical precious metal, not locked in some vault in Switzerland or whatever, bury it out in the woods if you have to, whatever. But make sure that you are, in close proximity to the goal, simply because there's an economy collapse or there's like, all these black swan events happen all at once. You're going to want some gold. So for me, gold isn't even an investment. Gold is something that I hold as an insurance policy against, a corrupt federal treasury or against a corrupt, or basically just really as a hedge against everything else, like it's like a fallback, So I don't treat it as an investment. I'm not looking to get rich off of gold, but I do. I was at a billionaire's house one day, and he had all these trophies and all these awards everywhere. And then he had this really beat up poster of like this guy climbing a mountain. And I went up to him and I said, "Why did you have this old ratty beat up poster on your wall? But you have all these amazing trophies and everything else everywhere else." He's like, "I keep that." He said, "I've had that poster forever, and I keep it there to remind me that as I'm climbing up the mountain, as the mountain climber is, that for every so often that I'm climbing, I simply tie myself off. Then I climb up more, and then I tie myself off again. Then I climb up more, and I tie myself off again. And so that way, whenever I fall, which I inevitably will as a mountain climber, or a businessman, I'll only fall back to the place that I last tied myself off." And so holding physical assets and precious metals like gold, that really is what even the Federal Reserve is based off of. I've got this amazing book called The Creature from Jekyll Island. I don't know if you guys can see that right there, but it's an amazing look at the second history it's an amazing look at the history of the Federal Reserve. And so that's why I'm really big into decentralization, because I'm not a fan of fractionalized, or really just fractional reserve banking, quantitative easing, whatever you want to call it, money printing. It's just, in my opinion, it's not the way to go. Now, what I want to do is I want to show a few more things on the chart, if that's okay, and then maybe we can have you show your chart, or we can take some questions. So there's also so we talked about very key levels of support, right? But let's talk about some resistance. I mean, this red line right here on the weekly, this is the line I'm looking at as once we break across this specific line on the weekly, and arguably, you could even come here and draw another line from this peak down to the closest touching candle. That's how you guys want to do it. You want it to be the closest touching. This is a specific type of classical analysis, I believe, called the fan method, and it works vertically with support and going downwards with resistance. So that would be more of a shorter term line. But really on the macro sense, what I'm looking at is this right here. Because once we break above this, then it's definitely confirmation as far as I'm concerned of a bull market. But I believe it can form below. Now, there's a few things I want to talk about also. Is look at the RSI. I mean, the RSI, if we actually look at it, let's see if I can make this bigger.
What's crazy? Just to add into this, Josh and I, him and I were actually flown out to Wyoming in a private jet by the founder of Ethereum and Cardano. His name is Charles Hoskinson, and his business partner Brock. Or I think it was Brock that set that up for us.
Yeah,
and, but yeah, I mean, they're all in the same crew. He was actually running for president, and so he flew out Joshua, Earp, and I. It was just Joshua and I, and then some of the biggest TikTokers in the world, and some other important people in this private jet. And this was November of 2020, right before Bitcoin had broken its all-time high. And so Brock himself, he founded EOS and a couple other projects. He's actually the chairman of the Blockchain Foundation. And he flew out Joshua, Earp, and I. And we went out to Wyoming. And what's insane about that is, one thing that we were taught there, and this was right before the bull market, is that bear markets bear fruits and bull markets are bullshit. Do you remember that, Josh?
Oh yeah, 100%. I mean, everybody hates bear markets, but they don't realize that this is where true wealth is accumulated. It's like what you said, if you could go back to March 2020, what would you do? Would have been the best return on your capital. And this is like deja vu, because if you take the bear market of 2020, in fact, the end
I didn't even notice that.
It literally lines up with.
I didn't even notice that.
So the reason why you're experiencing deja vu is because this is real. We are literally living in the times of March 2020, essentially. As far as like these lines. Now here's one thing I want to mention about this RSI as well down here. We are below the lower oscillator band of the RSI, somewhere around the 27 mark. So we're so incredibly low. If you look at every single time we've ever got to this level on the weekly RSI, every single time, we have always had a major run up after that. And so, you never want to trade based off of indicators, as Naeem has said as well. You want to trade based off of market structure. You want to trade based off of volume and overall trend. And then you use an indicator simply as an indicator. But I'm just saying right now, I mean, this is what we're looking at right here. Let's just put it this way. If we don't get a bounce here, and this isn't the bottom, we're going to have bigger things.
We're going to have bigger problems. We might have to tap into our gold stores.
Yeah. Yeah, that's what the gold's for. And it's like, it can't go to zero. And if it does, then, you know, you'll have bigger problems than it going to zero. Because literally that means Armageddon is outside your doorstep, you know, in order for this type of asset to go to zero. Because it's correlated also with the S&P and many other things as well. Now, so that's my line of resistance. I pointed out the RSI. But also, I just wanted to go, let's check out the daily really quickly.
Lauren Thomas in the house says, what's up, guys?
You need short term, so I did want to, before we answer some questions or switch it back over to you.
Bro, somebody just said that they just witnessed a car crash as soon as they opened our live stream. Wow. I hope things are going good there. Jason says, I think crypto will decouple from the traditional markets very soon. Thoughts on that? Josh, you always tell me. I told Josh, I was like this. He's like, hey, he called and he's like, hey, I'm going to take a massive short position on Bitcoin today. I'm like, what are you talking about, dude? I'm like, this thing's going to 24K. He's like, no, it's not. He's like, this thing is forming a lower high. And he takes a short and he makes money on the short. And I'm like, why are you shorting right now? He's like, dude, he's like, it hasn't broke its lower high. I'm not going long right now. I'm going to take a short. And I'm like, I don't know about taking a short right now, Josh. I know Josh is a long-term perma-bull, but, you know, it's never bad to make a, you know, we got to feed the family somehow, right? So, I'm just kidding. But I'm like, no, it's going to hit 24K. I'm like, he's like, well, why? And I'm like, well, because the S&P 500 closed 3% up on Friday. It's up for the week. And you know, and it already, based on schematics, the four-dimensional revolving parts, it looks like Bitcoin needs to hit 24,000 to just follow what the S&P 500 has done. I was like, if Bitcoin dumps, it would be doing something abnormal. And Josh is like, oh, but doesn't Bitcoin decouple from the S&P 500 all the time? And I don't care. And I'm like, well, let me enter the short position here with you too. I'm just kidding. But what do you think about the correlations, Josh? Somebody's asking, Jason's asking about the correlations. By the way, subscribe to Josh's channel. He just opened up a new YouTube channel. I'm helping him get his channel on board. He's one of my best friends. Been working together for over 5 years now. And he's one of the best analysts I personally know. He's just never on social media. Now he's starting to get on social media. And he just opened up his channel, 100 subscribers. We want to get him to 100 subscribers. We have over 100 people watching this right now. So subscribe to Josh. Link is in the description below. It's the second link in the description. But go ahead, Josh. What do you think about the correlations? And I'd love for you to go into Bitcoin's immediate short term as well, because it seems like the viewers are interested in that. And then for those on the live stream, ask more questions. The longer you want us to go, the more questions you want to throw at us. So. And Raiden, by the way, just to end it, Raiden says, thanks for the response, Josh. Once again, gold proves itself. I love it. Hopefully Bitcoin can get there one day.
Yeah, I call gold a physical stable coin. That's what I call it. You know, it's better than a digital stable coin. You know, you can hold it, you can use it. You know, the internet shuts down and there's no more Bitcoin. Well, guess what? You have something, right? The world's richest people in the world, and Naeem and I deal with them and their families, you know, all the time. They all have at least some physical holdings of gold, of what you have, like movable wealth and immovable wealth. Immovable wealth is like a house, real estate. Movable wealth would be like gold, something like that. But yeah, so about the correlation, I mean, it is what it is, right? It's heavily correlated. Recently there was, you know, a decorrelation within the past like month or so, where, you know, the S&P 500 pumped and Bitcoin actually dropped. There, you know, it did something very strange yesterday, which Naeem also mentioned, which is equity markets closed bullish, but yet, Bitcoin proceeded to, you know, have some downside. So the correlation is what it is. It's just something to look at the outside environment. But as Naeem will also tell you, it's all about just looking at the chart. So let's go over some immediate short-term, you know, analysis real quick. So first of all, we have to be mindful of the fact that we hit this yellow line, this really big, thick yellow line. I make it yellow because I like it to remind me of gold. You know, I'm following the yellow brick road. If you just follow the yellow brick road and follow the gold, you know, you will reach the destination. So the whole thing is, guys, you know, we have this blue horizontal line, which is the support at around 20,000, a little bit over than that. Okay, so what I'm looking to do is I'm personally looking to long anytime that we come down to 20,000, and I'm going to set my stop loss right below this market structure, probably at around like 19,679. And, you know, if it gets hit, it gets hit. That's fine. It doesn't matter. Because if it does reach that point, then it could indicate a trend reversal. And I don't want to be constantly adding to a losing position and spending, you know, days of my time babysitting a losing trade. You want to be babysitting a winning trade, not a losing trade. So also for my own time is another reason why I have that stop there. But it's all about your risk reward ratio. You know, if you actually come over here and you just type in, for instance, you can come over here and do, I believe it's called long position.
Yeah, you're gonna get lost in the charts, bro. It's hard to find that stuff.
Right here.
There you go.
Yeah, right. Yeah, so I mean, if you look at your risk reward ratio there, I mean, you know, it's pretty significant. And so now here's the thing, though. So there's a few things going on, right? We have what you would call basically a rising wedge on top of this descending triangle. And then all that on top of the 20,000 support line. And yes, we did come down. You could argue that this is an inverted head and shoulders. So, but also at the same time, you could also argue that this is a double top. And even more so, I guess now you could really argue that, you know, because this is on the 4-hourly time frame. So when you're trading based off a market structure, you always want to be looking at a higher time frame. The 4 hours is perfect for this. And essentially, you could argue this is a triple top.
I think we're going to smash through. I believe in 4-dimensional revolving parts, Josh. I think it's not a top. It's nothing to be worried about. I think it's just low volume, and the next spur of volume is going to be buyers, and it's going to just smash through that resistance. I mean, unless somebody's really trying to get Celsius to go bankrupt, I don't know. I mean, now JP Morgan says they want to acquire their assets, right? Isn't that crazy? They have distressed assets. Yeah. They acquire all their Bitcoin. It's like, come on.
Yeah, and I'm bullish long term. And so that's why I have, you know, the support line drawn here with the blue at 20,000. The resistance right above the previous market structure up here. And then this this white dashed line kind of indicates the 50% line between the red and the blue. So that it's the halfway point. So right now we are struggling a little bit to get above the halfway point, but I'm like Naeem. I really think and believe in Bitcoin long term, especially since we hit this yellow line. So the fact that we hit this yellow line, sure, could we retest it? Sure, why not? But is it likely? Most likely not. The most likely thing to happen, in my opinion, is for us to, you know, and it could pump past here, but I think we're going to get another touch.
I see. As a day trader. Let me quickly pull my screen up, because as a day trader, I see what Josh is saying, guys. You know, basically what Josh is saying here is that when it comes to, you know, making a living, going to, you know, get enough for a nice paycheck, when it comes to day trading is what I'm really saying. When it comes to day trading, right, the margin trading, right, it's all about margins, right? Right now, it looks like, you know, like if you were to ask yourself, there's only two options. Josh and I always say this, you know, it's like roulette, right? You got two options. You either go long or you go short when it comes to day trading, right? Well, when it comes to day trading, you know, taking a short here and then setting your stop loss, you know, within 0.5% of where this high is probably, you know, a lot better of a risk to reward to take a short here, because you have all of this space down here where price can get to, versus taking a long position here. You know, it's like, where are you going to set your stop loss on a long position here? I mean, if you're trying to set a stop loss on a long position here, you're talking a stop loss all the way down here at 19,000. It just doesn't, you know, it's like I ain't entering a long position here, at least on margin. But a short position I might entertain with a very tight stop loss right here, because, you know, just like Hi says on the live chat, he says, I believe when futures open, we will smash through that resistance. Even Brett says breaking that top is going to be huge, then a fake rally and continue. So basically what we're saying is we're all watching this area here at 21.7. So we know when Bitcoin breaks through, because this is a global 24/7 market, as soon as everyone sees Bitcoin at 21.7, it ain't just going to have a cup of coffee and you know, it's going to break through. You know, we're going to see some volume only if we break through it. So, you know, so if you are in a short, have a very, you know, tight stop loss with the stop loss on the order book, because, you know, that could be some quick price action if we break this high. Which I think a lot of people believe that we could break that high. Josh, somebody's asking about Ethereum. And they wanted, Big A is saying, could you all take a look at Ethereum when you finish with Bitcoin? Do you have an? Well, let me quickly talk about Ethereum to Bitcoin. And I'll let Josh talk about Ethereum to US dollar. So Ethereum to Bitcoin chart. This is the best indicator of market sentiment in the altcoin markets, right? Because Ethereum leads all of the other altcoins. Without Ethereum, you're not going to have many other altcoins, right? And so the fact that we breached back above 53,500 Satoshis, and on the weekly candle, look how much volume came in. We got way more buyers than sellers on the Ethereum to Bitcoin. This to me looks like a potential short-term bottom for the Ethereum to Bitcoin chart. Just look at that volume. We had a lot of sellers, but then so much more volume came in to rescue that price. And so 53,500 is obviously an important level that the bulls want to defend. Based on the weekly chart, we also got volume there. And so what does that tell me? Well, we start on the weekly, now we go into the daily, and you can see we had a very nice push up. And is it interesting that Ethereum decided to follow the S&P 500 already, but Bitcoin hasn't? I think that's an odd puzzle piece on the table. And so the Ethereum to Bitcoin chart, sorry, Josh, you had something to say?
I was just going to say, some people think that Ethereum is going to flip Bitcoin, so that would be interesting if this was the beginning of
Hell no,
I don't
man.
Ain't
gonna happen, bro. It ain't gonna happen, dude. They said that in 2018. They said that in 2017. They said that in 2020. It ain't gonna happen, man.
Well, there's a cool friend you and I have. I'm not gonna mention his name, but he believes in the next, I don't even know, something crazy like 24 months, ETH is gonna flip Bitcoin. I'm like, man, that's like saying 100K Bitcoin, in the near future.
I think there's a possibility in the long future. It's just, I think it's gonna take a decade. I think it'll take a decade if that's gonna happen. What do you guys think?
I don't think it's very likely. Definitely not in a short time period. But I believe it is possible over time.
Well, here's the thing. I'll mention this. I'll mention this on the technical side. If Bitcoin does break that local high at 21,700. Ethereum will most likely come to test 1440, which is the 2018 previous all-time high that we broke and did not come to retest yet. And so, one of the rules is when you break a major level, you want to come and you want to at least test it. And so we broke through 1440. We never came back to test it. If Bitcoin gets above 21,700, I think that justifies Ethereum also moving up to retest the 2018 previous all-time high at 1440, and maybe that's where we can potentially consider short positions. I don't know. I mean, at the end of the day, I'm thinking long positions at Bitcoin at 21,000 versus, the time to short was 60,000, 44,000, 39,000, 34,700. Those were the times to short in my opinion. I mean, if you watch Crypto Face, right, he had a blood diamond trigger at 34,788, that weekly candle, that blood diamond, and now we came all the way down to 17. So that played out already. The bearish scenario played out. The bears already got what they wanted. The bears have already gotten their food. They've already ate, right? So I don't know. What do you think, Josh? I'll pull your screen up.
Yeah, for sure. Great point. So let me know when you can see my screen.
It's up.
Okay, cool. So another thing I wanted to point about Bitcoin, which by the way, Ethereum mostly follows Bitcoin. So that's why we always look at Bitcoin. But right now, it may have a little interdependency, or it may be independent on that. If that's the right word for that. But one thing, so I did want to point out the bullish scenario, because I do think there's a good case for bullishness here. I mean, the fact that we immediately hit this yellow line and bounced right back. Not only that, these two yellow lines up here, this rising wedge, we've been respecting this rising wedge as well. So, I mean, technically the top of this right here, our target would be somewhere around 24,000. So I definitely see that happening in our near future. The other thing too is that, I believe, the other thing too is like, this is just a short-term resistance line. This blue line up here, all the way at 28,000, that's really the real target, because it's magnetized between these blue lines. I mean, you got to remember, these are the weekly horizontal blue lines that show the most confluence. They have the most, weekly touches. They have the most relevance. And so, to be honest with you, not even 24,000. I mean, if we smash through that, where the next stop essentially is going to be 28,519, which, isn't going to take much to get back up there. So, and not only that, another case for the Bulls is that, which by the way was my favorite basketball team growing up, the Bulls, because I'm from Illinois. Not Chicago though, but love the Chicago Bulls. So the other thing is obviously this rising wedge, but here's the other thing. We broke to the upside of this descending triangle. And we're, essentially we're having a cup of coffee outside the breakout of this descending triangle. So that's not our, final destination, as Naeem always says, right? When we have that cup of coffee. So the fact that we are broken out to the upside here is very important. And it's something I'm
let me quickly show. No, this is good stuff, Josh. I'm gonna put you right back on. So what does Josh mean when he says that the cup of coffee isn't the final destination? Well, I'll show you exactly what I'm talking about, snipers. So, and by the way, for those that just tuned in, I see we're hitting all-time new highs with viewers right now. Subscribe to Josh's channel. Link is in the description below. He just started his channel. Let's get him to 100 subscribers. Could you guys get him to 100 subscribers? So this is what I mean by having a cup of coffee is not the final destination, right? So a final destination is an indication of whether you've bottomed, whether you've topped, at least in the immediate short term, right? Because everyone asks the question, have we bottomed? Have we topped, right? Is this it? Are we going to see more downside? Well, I'll give you an example, a couple examples actually. If we look at this right here, what we're seeing here is a cup of coffee that happened right above 19,798. And this was right before we ended up dumping, right? So because we had a cup of coffee right above this major support that was never tested, I told you guys that cup of coffee was telling me that, whoa, this might not be the final destination. And guess what? It wasn't the final destination. We came and we broke down, and then we actually did find a potential final destination because we didn't spend much time below 18,000, right? And so here's where this other, instance has happened so far, where we got back above 19,798, which was a major level. So this is bullish. Getting above it was bullish. Having the cup of coffee above it was also telling us that not only was it bullish that we got back above it, but it wasn't the final destination. And guess what? It was not the final destination. As you can see right now with price action at least 7% above where it was having a cup of coffee. And so I think that this was, a great example of the cup of coffee scenario. Now, let's say we had a cup of coffee, we knew it wasn't the final destination, and then we broke down, and then we rejected 19,798, and we had a cup of coffee below it, then that would have actually assumed that the next move was down. But because we had the cup of coffee above it, so that's how you kind of have to understand the cup of coffee. Cup of coffee just means consolidation. It's buying time. It's eating time off the clock, right? And then that final destination will come when you see an immediate reaction to a major level, and you can see there was an immediate reaction here with the daily candle only being able to wick below. Pretty much 19,000 was almost really the final destination, but it went even as far as coming below 18,000, right? So this is what's indicative of a final destination. So if we were to kind of think of this at like March of 2020, we're talking about, okay, yeah, Bitcoin dipped to 3,900, then it started to consolidate at 5,000, had a cup of coffee, never came back down. People started to get a little bit more confident in it. Then 7,000, 8,000, 9,000, 10,000, and then the rest is history, right? So that's how you bottom out. So I would say that, is it likely that we come back below the 2018 previous all-time high? Well, I'll tell you what, snipers, if we're expecting 24,000 to come on the table here by the end of this weekend, that's going to put this level a lot further away than where it's at now. And so am I saying go jump into a long position? Well, if you're on margin, it's probably not wise to be long. I'd go short here with a very tight stop loss at this local high. I'm not short right now for a reason, because I believe that Bitcoin will follow the equity markets and so forth. So Josh, you still there? I'd love to hear your thoughts for those on the YouTube live, and then we'll wrap this up soon. But Josh, I don't know.
Yeah.
You are there.
I'll just share one other thing that I thought had great confluence. Let me know when you can see.
Go ahead.
Yeah. Okay, so you can see everything, right?
Yes.
So another thing to look at too is the VPVR, which is essentially, the volume. But I like it because it shows on the right-hand side of your chart rather than down below. So you can really see those areas of confluence where there's the most volume. And then the interesting thing is when you look at the VPVR, you can see, this it almost looks like a middle finger, like it's flipping you off right here. But the most volume, right, the most support is at this line right here.
Where did it? Wait,
right?
I've never seen. I haven't looked at the VPVR. Where's the most volume? 20. Could you remove that RSI from the bottom? Could you remove the? Could you remove
20,000. is what it's saying.
Could you remove?
But I mean, I would still go down to 20,000 just to be safe if I was going to enter a long. But because we're at the halfway mark. We're in the middle of no man's land. We have the local resistance up here on the daily. We have the most candle touches right here. So I think this was a blip, an accident when we came down. We just had to touch this yellow line as always. But right now we're in the middle of no man's land. So I'm personally waiting for it to come down to 20,000 or so before I take out a
Well,
long.
honestly, Josh, we didn't
up,
touch the yellow line, which is actually bullish, because when you front run a level like that and then you immediately turn around, you don't want it to touch. At the end of the day, if it's a major level, you want to front run it and not touch. Would you mind just removing the RSI on the bottom so that we can see more of the knocking that? All right, perfect. Go ahead, man. You're spitting fire. I didn't know VPVR was at 20K. That's huge. It's above. So most of the volume of this consolidation came in.
That's where. So if it falls below this level, that's why I'm opening up a long down here. And I actually did open up a long. Naeem and I both.
Yeah, we longed that.
We should have held on to our long positions, but you got to take what the market gives you. There's an old saying, guys, that says no one ever went broke taking profits. And so, but usually what we would do is exit 75% of the trade by now because we longed down here at 20,000. And then let the rest of the trade ride and put our stop loss to break even, and that's or maybe stop loss and profit. I like to do what's called a manual trailing stop loss, so I can do it based off market structure as opposed to just some random number. But that's what we're looking at, guys. And so right now, I wouldn't open up. I personally wouldn't open up a long or a short because look at this white dotted line right here. We are literally right in the middle.
You know what we could do? You could set up a buy stop order. You could set up a buy stop.
You probably never seen these markets been so indecisive as you have.
No. You know what, Josh? I'll be honest. I just thought of this. We can set up a buy stop at 21.7. So if price hits 21.7, we automatically market order in long because we know if it hits 21.7, it's going to most likely reach 24,000. So that could be an opportunity. Matter of fact, I might go on KuCoin right now, and I'm going to do that as soon as we're done.
Exactly.
Yeah, well, let's do that, Josh. As soon as we're done, let's set up a buy stop long position if we reach that level. Because even if it goes Asian market session 3 a.m., I'll take it. I mean, I'll go in long if we breach that high because I think we'll pump. We'll really pump. So a conditional order there might be a good idea. We have some questions here. Raiden says, "Thanks for doing this. I subbed to Josh." By the way, his link is in the description below, everyone, if you want to subscribe to Joshua Earp. He just launched his first YouTube channel, but he's one of the best analysts that I personally know. He's just never been on social media. Raiden says, take what the market gives because it can take it right back. I love it. Swamp Gator says, good video. Big A says, you can almost gauge market sentiment by how many viewers are in a bear market. Big spike in viewers. Yeah, of course. We can do the YouTube indicator if we wanted. And so while Josh, do you have anything else to say about the Bitcoin?
Yeah, because I'm just really building the case for bullishness, and even if we do have a retracement of 20,000, that would still be considered bullish because that would be, what would that be? That'd be kind of like a quadruple bottom. I mean, it's not uncommon to really, the thing is the other thing to understand too is when we zoom out here on the weekly, the reason why I'm so bullish at 20,000 is because that's the 2017 previous high. And so it really is I was telling Naeem on the phone today, I said, look, man, let me get rid of this too much on the chart right now. Let me get rid of this VPVR. And then I'll show you another one of my favorite indicators. But essentially, here's the thing. The reason why I'm so bullish is because this is also, there's so much confluence here. And that's the number one thing you want to look for when you're trading. Because the more confluence you have, the more confirmed that direction is going to be. And so this is the previous 2017 all-time high. So if it comes down to 20,000 again, which, I'm not saying it will, but I'm just saying I'm definitely entering a long with a stop loss, not too far below that. But here's the thing. So let's go back to the daily. Here's another thing I wanted to point out, and this would also mark the case for bullishness, is the specific indicator. We're just going to look at the daily right here, and it's called moon phases. And Naeem has shown you guys this probably on the channel before, but essentially, if we check it out, which it is rarely wrong, we go here to moon phases, we'll be able to see we are in a bullish moon phase because what this is essentially doing right now is, it's labeling the chart with these vertical stripes. You're either in the gray zone or the dark blue zone, or you're in the light gray zone. And essentially, if you look back, I mean, if you would have went short at this full moon, then obviously look at that downside potential. Look at that. I mean, let's
Did you just
measure
pull
that.
out the moon indicator? No way.
What is-
Oh my
Look,
God, bro. You told me I couldn't show that on YouTube. You told me I couldn't show them that on YouTube.
I thought you said you did already.
No, dude, I've kept it a
Okay.
secret
I didn't
since you
even-
told me about
honestly,
it, man.
like,
Oh my
Honestly, I don't
gosh.
really look too much at indicators anymore anyway, so I figured it'd be okay to show. But the thing is like, but yeah, I just wanted to show this real quick. So what percentage is that? 46%, move you could have made, which is huge. But also all because you saw this moon phase on the daily. That's the best place to look at this stuff right now is the daily. I mean, as soon as you saw this, think of that at 10x
Holy
leverage.
smokes. So we dumped right on the
6%.
full moon, bro.
Yeah, no, but look though, even this move right here, if we were to measure this right here from this bottom to where we are currently,
Whoa.
that's still a good 20%, right? So, and then on 10x leverage, obviously do the math, right? So the whole thing is we're still in the bull cycle phase, and we haven't completed it yet. And if you look and you back test the moon phases indicator, you'll be able to see, look, there's another full moon. If you would have shorted that, look at that move. Same thing here. And look, during this new moon down here, you can see if you would have went long. So basically, every time that it hits the top of the moon phase, or every time you see a full moon, if you go short, and every time you see on the daily, a new moon, essentially, that's when you go long. And so right now, we just have major confluence, guys. We just have major confluence. Not only are we at the 2017 all-time high, not only did we touch this yellow line, which is the number one line that you will ever see anywhere, especially here on YouTube, is this damn yellow line. It's so important. It has the most touches. So not only is there that, the moon phases are in our favor. VPVR is in our favor. Everything right now is in our favor. And so so that's kind of what I wanted to touch on a little bit. And I wanted to just also maybe say that the yearly, daily, monthly open, which Naeem has shown me, which Naeem shows me stuff all the time. He's the one that really got me started doing this stuff. And yeah, that's really, really huge, right? So if we go to the 1 hour, guys, that's pretty much it. We're still here in the bullish moon phase. And yeah, that's really all I wanted to share.
Bro, so check this out, snipers. So if we were to just look at market structure, and by the way, if you have any questions for Josh, he's one of the wisest, most intelligent individuals that I personally know. And I'll tell you, Josh and I, we actually, Josh, you want to tell him how we, what we've done together in the past?
Yeah, for sure.
Because
and just so your viewers know, and a lot of your viewers already know this, but Naeem is one of the first guys on YouTube to really be talking about these markets. How old were you when you first got into crypto?
Man, I remember PayPal banned my account when I was 13 years old. I had a YouTube channel. I can actually pull it up right now. It's still up. It was actually a very successful YouTube channel in gaming. And I had videos with millions of views at 14 or 13 years old. And if you heard my voice back then, it definitely sounded like a child. But I was making money on YouTube. I actually met Ryan Fwiz, who's now the CEO of Polygon. At the time, he was the CEO of Machinima, or he was the director of Machinima, and then he moved into YouTube as the director of gaming, and then he's the director of Polygon. But anyways, yeah. But I've been around the game.
Yeah. But I just wanted to say one thing about you though is that not only have you been doing it the longest, but you're, as much as Naeem says great things about me, really he's just talking about himself, because I'm really a student of his. And the whole thing is that, this guy, literally we had a penthouse together in Hollywood, and he would bring over like the vice president of MGM Studios and like all the biggest people you could ever imagine, celebrities, billionaires, multi-billionaires. This guy, and they're all going to Naeem for this information. So I was very grateful and thankful, to have close proximity to Naeem, to be able to, leverage some of these things that he was showing me, So I just wanted to mention that real quick. I'm sure a lot of your viewers already know that, you're doing all that stuff, but it's never too much to reiterate.
Well, Josh, who are you with 2 days ago? You FaceTime me, and who are you with just 2 days ago? Or was that yesterday?
Pod podcast also with Mike Tyson.
You were at Mike Tyson's house, right? He was at Mike Tyson's house. He FaceTimes. He's like, "Yo, Naeem, I'm here with Mike Tyson." I'm like the greatest fighter of all time, Mike Tyson. He's like, "Yeah, Mike Tyson." I'm like, "No fucking way." And he's like, "Yeah, man." And he's like, "You want to come? Aren't you gonna see him like almost every Tuesday now?" Or I don't even know what it is, man.
But you though, you're advising guys like Jason.
I remember, dude. You know you.
Where to put their money, you know.
Oh man, don't even you can't mention the celebrities, man. I've got NDAs. Actually, I don't have NDAs.
Well, you can't mention. No, I'm just kidding.
Oh man.
Like, Naeem is at the top of the game. So go ahead, Naeem.
Well, I wanted to mention real quick.
Yeah.
Well, everyone talks about the DXY, right? We broke 20-year highs. Guess what? We have a bearish divergence, a very strong bearish divergence. It's not the first time. Now we've got bearish divergence on the weekly chart, but more importantly, on the daily chart, we've had bearish divergence. It's just continuing to create more and more bearish divergence here. So just notice here how we started off with bearish divergence on the daily chart, but then we continued further up, and we're just continuing to form more and more bearish divergence. This is a sign of exhaustion. So for those that like subscribe to indicators, once again, I don't use indicators because I use them, but as confirmations. I always tell Josh, price action's number one, market structure, and overall trend. But fact is, we're getting exhausted here at the DXY. So I think at some point or another, we're going to have to see it calm down. And what we do know for a damn fact is that every single time the DXY has topped, it has marked a bottom for Bitcoin. But that also applies to the Euro to USD pairing. It's an inversely correlated chart where notice how every time the Euro to USD pairing, let's say in 2017, it bottomed out and reversed, that was the start of a bull market for Bitcoin. Same thing in 2020. As soon as the Euro to USD pairing bottomed out and reversed, it was the start of a massive bull run for Bitcoin. So the question is, with the Euro to USD forming its yearly low so far in May of 2022, even so far into June, as the equity markets have continued to sold off, we have yet to breach that low. So far, we've got a double bottom here. Question is, if this is truly the reversal, that's also the bottom for Bitcoin. And so I think something to monitor is Euro to USD. It held up. We're seeing increased buy pressure here. Sure as hell to me looks like a case to make that there's a double bottom here. And if that's the case, just like what happened in 2020 where we bottomed, and 2017 where we bottomed, I think that there's a high chance that this could also be a bottom. And the Euro to USD pairing is an indicator that investors and foreign investors specifically are more apt to risk by being inside of the euro, not just the US dollar. And that's why it correlates with Bitcoin as well, because it's one of those risk on. But this is a Forex specific chart, which is one of my favorite revolving parts, because it's a little bit, it's left or right. It's pretty extreme to look at this chart. And then, I think we do have some questions here, and then we'll kind of talk about a couple things here. But MicroStrategy, notice how, I think it's important to look at the equities that have the largest Bitcoin holdings for understanding of how institutional sentiment is in the market, because a lot of institutions cannot invest in Bitcoin spot, right? And so they have to go into some of these alternatives like MicroStrategy, which MicroStrategy is actually, you're getting the best bang for your buck. It's closest thing to a Bitcoin spot ETF, even more than the Grayscale Bitcoin Trust. Even though GBTC is trading at a massive premium, MicroStrategy is also trading at that premium, but they also have leverage on their Bitcoin, and they have a company behind it that produces cash flow in which they put straight back into Bitcoin. And so I don't think any of these products are better than holding Bitcoin on a Ledger or a Trezor. But what I will say is it's a good gauge of institutional sentiment, because institutions can only enter into Bitcoin through some of these alternatives. And so what's interesting about MicroStrategy? Well, even though Bitcoin continued to form new lows, guess what? It did not breach its May lows. MicroStrategy held strong to its May lows, and you can see a very clear increase of buy pressure here on the daily time frame, and we can even go into the weekly time frame. But why is MicroStrategy seeing institutional inflows right now? I think that that's something interesting to put on the table. And then you can also see it also saw the most amount of buy volume on its last weekly candle than it's ever seen in the history of its existence. Even when it started to rally at the start of the bull market, we haven't seen this much buy volume. Just look at the significance of this buy volume here. And so could that mark a bottom? I mean, what do you think, Josh?
Yeah, I mean, it's definitely very possible. Now, speaking of if we're hitting a bottom or not, there's one last thing I wanted to share, and it's not on the chart. It's just something on my computer. It is a chart, but it's just not the live chart. So let me know whenever they can see that.
You're ready, bro. You're all in.
All right, cool. So it's this right here, and I've told you guys about it before, but it's the high cycle top indicator. Now, also, you can use this to kind of gauge where the bottom might be as well. And so the thing here is if you look at this bottom yellow line, we've never crossed below this bottom yellow line without having a major bull run right afterwards, right? There's never been a history in the history of time of Bitcoin where it's dropped below without having a gigantic, major, unbelievable bull run afterwards, right? And so the fact is we're severely below this yellow line. And the thing is here, and if you actually look at the pi cycle top indicator, you know, it has the calculation of specific moving averages that it also divides by itself. And so you can see that we are due for another bull run for sure. Now, is this the exact bottom? It's going to be hard to tell. I personally believe that it's a high chance that it could be. But, you know, the market will always do the complete opposite of what you usually think it's going to do. You know, the most ironic choice, right? And so it's not to say that we couldn't go a little lower before going higher, but ultimately I'm very, very bullish. Now, the last thing, I know I said last thing, but that was second to last thing, is a lot of people, when in doubt, what you guys need to do is you need to zoom out, okay? So when we go to the monthly candle right here, the monthly chart, I mean, where each candle is a month, let's do what you said and get rid of this indicator down here.
Thank you, man.
Thank you. Let's see, hold on. Should go, there we go. So the whole thing is, guys, when we zoom out on the monthly chart, this is going to give a lot of you guys hope because I'm sure a lot of you guys got wrecked in the bear market. But here's the whole thing. Not only are we due for another one of these vertical lines, which marks the beginning of each one, but when we switch it to logarithmic.
Somebody said that in the chat. They were like, switch to log if you're real. So I forgot who said it, but they said go to log.
So I like to look at both because, like, I used to only look at log. So I guess according to that logic, I was only real. I was too real. But then I just understood that a lot of the retail traders, a lot of the beginning traders, they weren't looking at log. And so it helps me for my trading psychology to try to figure out what the market's going to do, realizing that most of the market is looking at the regular chart. So I do look at log. And not only do I switch between log and non-log, but I also switch between regular candles and high Kenichi candles, which takes the average of the last candle. But before that, though, if we're looking log on a monthly time frame, this is back when Bitcoin was at $110. So, quite a few months ago. So the whole thing is, guys, it begins to paint a different picture. And what you can see is that no matter how bad it seems that we're going down, which don't get me wrong, we took a beating, going from 69,000 all the way down to where we are currently. But when in doubt, zoom out. And so when we zoom out on a high time frame and we switch it to log, you will see that it will become painfully obvious. And when I say painfully obvious, I mean painfully obvious that we are in an upwards trend. And so that's the last thing I personally wanted to end on. And, that's basically it.
I think that was great. Guys, subscribe to Josh's YouTube channel. The link is in the description below if you guys enjoyed this content. I know somebody asked about NFTs in the chat. I will just mention NFTs were a great hedge to a bear market. I think that if you are going to be entering into NFTs, just use caution and realize that 5 to 10 years from now, this market's going to look very different. And so the things that look great right now, the things that are attractive now are most likely not going to be around 5 to 10 years from now. So you have to be very careful, and just realize that, some of these NFTs like Bored Apes went from $300,000 to $400,000 now down below 100,000. And so they've also been affected. Let's just say that. I think, if you're going to be investing in NFTs, obviously in the bear market, it's the best time because, it's a bear market. But the future of NFTs is not guaranteed, at least in their current form. But what I know is guaranteed is Bitcoin. Bitcoin is always guaranteed. And so Ethereum is not guaranteed. Bitcoin is guaranteed. It's the storage of value of this market. And until something has a better use case, and when that something comes, it will eventually surpass Bitcoin's market cap. The same way that gold isn't the largest market in equities, right? You know, the S&P 500 is way larger than gold, and you know, and so gold is 11, let's say $10 trillion asset, while equities are 70, 80 trillion dollars, and so something's always going to come in, you know, but it's hard to argue because there's not one single equity or company that is actually larger than gold's market cap. So will anything ever actually surpass gold or Bitcoin, which is the digital version of gold in market cap? I don't know. I think that's hard to say, but what we do know is Bitcoin is for sure. Just look at that log chart that that Josh has pulled up. And so, yeah, with that, this was an awesome live stream. We were actually maintaining viewership, which means that we were pretty good the whole time. We'll wrap it up now, snipers. Josh and I plan to do more live streams together. You can subscribe to his channel. 100 subscribers is his goal for this video. He just launched his YouTube channel. And I will see you guys in our next daily update. Thank you all for tuning into the channel. I appreciate each and every one of you. Once again, bear markets bear fruit, and bull markets are bullshit. So with that, thank you all for tuning in. Smash the like button if you enjoyed this content, and I'll see you guys next time. Snipers.